All right, everybody, welcome. My name is the Mother Funded Trader, and I figured it was time to start this series that I'm currently going to be recording and posting to this page. Um, just a little bit of background. I've currently been. First of all, let me get this out of the way. I just want to put it out there. I am not a financial advisor. Do not take anything that I say as financial advice. I am not licensed. Anything that I say is purely based on speculation of my own opinion. So please do not take this into any account for you to do anything with any money that you have, any funded accounts, anything that, would hurt you monetarily and psychologically, to be completely honest with you. But anyways, a little bit of background about me. I've been trading for about, or I've been learning to trade for about a year and, ooh, I would say 6 months now. So about a year and a half, maybe a little bit more. But I've been on demo and I learned through ICT concepts and felt comfortable enough to where I and everybody says the same thing. Oh, I'm ready to move on to this step. I'm ready to move on to that step. Um, but after becoming profitable on demo, the next step was to go to a funded account because in my current financial situation, I do not believe I'm comfortable with enough capital to trade with live money right now. So I am going to go the funded route. And what I did is I did some research on funded companies, asked around other people of what they thought was the, not best, but because I mean, does anybody say there's a really best funded account company? Everybody's going to have, some sort of complaints about, something. But anyways, what I heard from a general consensus was my funding ticks. And you can do your own research. You can look them up, see, what they're all about, see what they offer, and see if it's, a fit for you. What I decided is that I was going to purchase a zero funded account, which means instant funding. Now, a lot of people might say, oh, well, I mean, don't you think you're kind of, skipping over the fact where you think if you're even ready to have a funded account? And I'm like, well, I mean, first of all, if you pass a funded challenge, you're going to have to pay more than likely a what's the activation fee. And second, I mean, people are going to say, oh, but the rules are a little bit different. I'm not really particular about making a crazy amount of money with this. I want to make consistent gains to let me know that, my abilities as a trader are there. And from there, the money will come. It's just like anything. The skill has to be there for results to happen. So, I mean, I'm not going to be trying to do anything crazy here. You'll see me take, trades on this channel, and, they're not going to be, 10R, 20R, 12R with, 13 tick stop losses. No, I'm a very basic trader. My models are pretty basic, that you'll find out. And if I get it wrong, then I get it wrong. But the main thing is, I want to show that you can go the funded route and you can build up enough capital, and you can do this. But it's not as, uh, how do I put this? It's not going to be as quick as some people might want or like or think. But that's okay, because at the end of the day, as long as you do it, as long as you achieve it, then who cares how long it takes? Because once you're there, then that's all that matters. So let's not rush the process, and let's have a good time here. So let's go ahead and look at what we got here. So today is Thursday, September 18th. You can see it down here. We had news at 8:30 unemployment claims that kind of sent us down here in this area. I have some stuff marked out. I'll explain it as I go along. You don't have to understand everything, and you don't have to have everything on my chart that I do if you don't want to. And you can still be profitable that way. I know people that trade with blank charts, like literally blank charts, don't mark anything, and they just trade off the confluences that are in price action. That's perfectly fine. Perfectly fine. But if you want, like me, if you want like a really, really like specific edge and you want to know pretty much everything, because that's what I did when I was learning how to trade and I was on demo. I was literally learning every single thing, and I'll put it out there. I'm not sure if I mentioned it or not, but I learned from ICT concepts, so all of my trading knowledge comes from ICT concepts. Anyways, so on the daily, let me take the drawings up here. We have this right here. We've busted through all-time highs twice, and in the past, we've reached all-time highs before when I was on demo and I was trying to sell it, and that didn't work out. So my initial bias when it comes to all-time highs right now, at least, I mean, from this reaction off of this area right here and this candle, what we've seen right here, I have no reason to believe this thing is not still bullish. So I'm going to be bullish until it shows me not. So as far as daily charts go, I expect this to, keep continuing higher for the time being. If we drop down to the 4-hour, let's just scale down to, the time frames that, we usually do to do our analysis. On the 4-hour, I like this pattern right here, which is a swing low right here, a swing high, and another swing low that's lower than this swing low. So this pattern right here is a breaker pattern. Technically, all of these candles are the breaker. These consecutive up candles are the breaker, but the most sensitivity is going to be in this up candle right here with the highest body. So if I put the drawings back on, you can tell that I put the shaded area on the breaker, or on this candle signifying the breaker. I have it shaded in blue for breaker. That's how I, like to remember it. Scale down to the 1-hour. 1-hour, we have this leg up over from here to here is the new day. But this leg is from yesterday, FOMC, so I'm going to include that because this is the whole run up here. From this leg down here to this leg up here, if we drag our fib from the low to the high, we get equilibrium right here. So, I mean, equilibrium is down here. I would like to see it come down to this discount, but it does not have to, because we do have this leg right here, because we do have another swing low. So if we put it right here, equilibrium is now here. And like I said, we are bullish. And here's another thing. Here is the settlement price of 414 yesterday. So we could come down here. It's going to have to show me that it really really has, wants to come down here for me to, like I said, wait for it to come on here, because I'm thinking, this thing's bullish. We have a breaker right here. I would like to see it support price on this breaker and continue higher. So that's what we have in the hourly chart. Would like to see it, like I said, come down in this shaded area and support price here. If it does, then we'll look to see if we can't take a trade. Dropping down to the 15-minute. This is the bellwether chart that I like to use. This is the chart that I used, a lot of my, confirming setups or confirming biases with. So as we can see here, from 8:30 in the morning, we had news, dropped it down, broke the swing low, market structure shift, created a fair value gap. We have a bearish breaker right here, which is a high, a swing high. Here we go. A swing high, a swing low, and then a higher swing high. Or you can use this one as well. What you do is you find the lowest candle body within that pattern, and here's your breaker. So as we can see, we also created a fair value gap. We've already hit that fair value gap right there. and it's actually sending it lower. So we have 1 minute till market open. I'm going to sit on my hands until it shows me a willingness to more than likely, drive back up higher. If it breaks the swing low, or if it comes down here and it, just keeps drifting lower and comes all the way down to the settlement price, perfectly fine. No worries there. Because, I mean, if there's no setup, then we don't take a trade. Pretty simple. We also have another breaker right here on the 15-minute. We have a swing low, a swing high, and then a lower swing low. So this is technically a breaker. So we have a breaker inside a breaker. And the reason why I'm not using this candle, even though it's higher, is because the body of this candle, let me move this, the body of this candle is higher than the body of that candle. So there's 8:30. Let me go ahead and delineate the opening price. Here's the opening price. And like I said, I'm using these dashed lines because if we look at between these two dashed lines, this is the gap between regular trading hours and electric trading hours. As we switch to regular trading hours down here, this is from 4:14 yesterday because technically, the stock market closes at 4:14, but trading still goes on electronically online for, 24 hours. Or basically 24 hours. It closes at 5 p.m. and opens back up at 6. But then it opens back up, like I said, at 6 o'clock, and then you can start trading again. So this happened during that time, and this is the, gap or, void of price that happened, between that time. So a lot of the times price wants to come and fill that. This thing is really big, like it's over 100 handles. So sometimes when it's that large, it doesn't always fill it completely in the day. It might come and fill it another day, or it might do it within, later in the week. But it sometimes doesn't always do it immediately or in that same day if it's this large. Usually it does. Around 70% of the time it does within the first 30 minutes of trading of within 9:30. So between 9:30 and 10 o'clock, typically it fills. I'm sorry if I've said all of it. It usually fills half of it within that first 30 minutes. So usually the first 30 minutes, it does fill half of it. So here it's come down, but it hasn't hit that breaker. So, and it's driving back up into this 15-minute fair value gap. So I'm not taking anything right now, because nothing makes sense to me. I'm not bearish. I can take shorts, but I prefer not to during this time, just because the bias is bullish for me. You see it's coming up into this bearish breaker. Let's do it down to the 5-minute. We didn't go to the 5-minute. So 5-minute, we have this leg down here. We take our Fibonacci, we drag it from this to this low. We have equilibrium right here. So we could see it come up into this area right here. Doesn't have to, but we could see it come up into this area above equilibrium and then maybe send it lower into this breaker. But like I said, all of that is speculation, so we are just monitoring price for the time being. What I didn't particularly like about this morning, and I'll let you know a little bit of a trading secret, or something that I have found out, is you see all of this movement. Like this movement from 6 o'clock last night, which was when it opened again, to the opening bell. We have literally this whole leg, and this is a ton of movement for overnight, like a ton of movement for overnight. So when that happens, I don't particularly like that, because what it can tend to cause the market to do at market open, because people see this, like they see this and they're like, oh, okay, yeah, it's going to continue higher. Oh yeah, no, I'm going to get this. I'm going to catch this. And a lot of the times it can cause the market to consolidate and not really move around a lot within the morning session. And the morning session is typically between 9:30 a.m. to um, around 11:30, I would say. Well, yeah, you can say 11:30 to 12. You can say 12 technically. But 11:30, I would probably, if you haven't taken a trade or you're not in the market already, I would advise not to take a trade after that time. Um, Let me see what else. So we're just, like I said, hanging around in this. And like I said, we hit this breaker right here. Nice reaction, down out of there. Let me see. Let me see. So I think that might be all the analysis that I wanted to give as of right now. Here is the midpoint of the opening range gap. That's what I call that, the opening range gap. Down here, this gray box is the new day opening gap. And you can go to ICT's YouTube page at, I think his YouTube handle is ICT. I might put it in the description of this video if you would like to check out his content. All of it's for free. And that's where I, learned essentially how to trade. So new day opening gap means where we closed at I'm on a 5-minute chart. Where we closed at 459, and then where we opened at 6 o'clock. So the close of this candle right here is where the start of the gap is, and the open of this candle is the high of this. So the low is and sometimes it's opposite and sometimes it's this way. It's not always the same, but it's the low is the close of this candle, which is the closing price of 459, and the opening price at 6 o'clock. And that, lost connection. Well, sometimes that happens. Sometimes I lose internet for some reason, which is not the greatest when I'm in a trade. But I have my phone, so that's gonna be that'll be fine because I can still manage it on my phone even if I'm in a trade. So we'll wait for the connection to we'll wait for it to reconnect before I continue. So let me see here. There we go. So let's see here. And you see how it left these equal level lows here? That is a signature, and it stopped right before this breaker. That is a signature of generating liquidity. So my concepts are ICT. Oh, I forgot to mention. So I said that I'm on a funded account. The funded account that I purchased was a $100,000 zero funded account. Like I said, instant funding and all that. So, I mean, we got nothing so far. It's a brand new account. Let me see what else. Let me see. I don't know if I'm going to have to blur that out or not. Might. Anyway, so as we can tell, it's brand new. So we're fine. Oh, and so the rules of the account, you can look up your own rules, but the rules of the account are, as far as when it comes to maximum amount that you can lose, it's 3%, or $3,000, so it's down to 97. So my amount of risk that I'll be taking right now is, depending on, my confidence level, maximum leverage for me is going to be 0.5%. So it's going to be 1/2 of that $100,000 account. So it's going to be $500. But like I said, depending on my confidence level, I might not even take a full 0.5%. I did some research on the platform, and there is a little bit of a difference between, placing orders. So when I'm about to place an order, you'll see me come over here and I'll go into my demo account real quick. So if we go to the demo, I will be checking my risk here. So let's say, I want to buy, 25 contracts here. And I'm on a micro. So that's what I'm trading. I trade the micro just because the risk, allows me to trade better that way. So if I want to sell 25 and I want to do a limit order, or even if I want to do a market order and I want to check, my stop loss and, how much risk I'm going to be taking in the trade. Let's say I wanted to take it right there. Let's just say hypothetically I wanted to take it right there and put my stop loss right here. See, that's too much risk. So I know I can't use that amount. So let's drop it down to 12. 582, it's still too much. So let's do 10. Boom, 485, that's right there, perfect. I would probably do maybe 11. Yeah, still too much. So I would do 10. So I would do 10, and then I really don't care about the take profit. I really care about, my stop loss more. So yeah, that's what I'll be doing when I decide I want to take a trade. So here we have a fair value gap, which is important because it is the first presented fair value gap post 9:30 opening bell. And if you mark this on your charts and extend it throughout the day, and I like to make this a dark greenish just so I can tell, even though I do that, I can definitely tell what it is. But that's how I remember it. If you extend it out throughout the day, price is going to refer to that level more than likely. If it doesn't, then that means, it's very, very heavy in one single direction. As we can see here, as I was mentioning about the equal level lows, like I said, comes off this breaker, comes down here, boom. Equal level lows are a very, high probability of getting hit because there's a lot of liquidity there. You'll notice I do have this green line right here at 24,646. See it? So this purple line, I'll explain everything, I guess. This purple line is the opening price at 12 a.m. And I like that because it gives me as like a guide of what the essential bias for the day will be, the session will be, because I like to see this type of price action where it moves down, moves up, and then continues higher. So let's see here. So we're seeing it come down here, and we're seeing it inside this breaker and inside this 4-hour breaker and inside this 15-minute breaker. Now, like I said, the full breaker is this. The most sensitivity might be in the upper candle, but for the lower time frames, I allow a little bit more of coloring outside the lines that I like to say, like this. The wick came outside of it, and like I said, the body is still, the bulk of it is still inside this full breaker, but it's inside this up candle. So as we can see here, it dipped below the midnight opening price. It did sweep this, it took some liquidity right here. So I like that. But we do have the halfway point of the opening range gap here. And we are still within that first 30 minutes. So it could come all the way down here. It doesn't have to, though. And if we look at the, because this is the midpoint, but if we look at 1/4 of it, we can see that's where we're at right now in that quarter. And that's just beautiful, isn't it? That's not random because I put that, this is a Gann box and this level is the midpoint. So when I drop that midpoint, let me move that off. It's ironic that this line is purple anyways, but when I drop that midpoint right there, where does it fall? Right on the midnight opening price. Isn't that's the reason why I love trading, because you can't do that. Like that can't happen if all this was random. Now we do have another breaker right here. What I would like to see if we can't, come up here, maybe get above this, and then, start gravitating up higher. Like I said, it doesn't have to, and if it doesn't afford me a setup, then I will not take it. Excuse me 1 minute. All right, apologies, folks. So I also remembered that I wanted to mention I'm not affiliated with any funded accounts, and my this channel is too small for me to even you know have any affiliations. So um, I'm not repping my funding ticks. I don't care if you use them or not. Um, and if I don't like this style of funded account, then I might look at something different. Um, and if it only has a challenge phase and it doesn't have instant funding, then so be it. Then I'll see about passing the challenge phase and then moving on to, like I said, the funded portion of it. So as we can see here, it's coming down here. I didn't particularly like that it's breaking this breaker down here, so I'm going to delete that one here. It's still inside this 4-hour breaker. And like I said, technically all of these candles are the breaker. So technically, it can come all the way down here and still be inside this breaker. And if we extend this all the way down here, and we get the midpoint of this breaker, make the midpoint, can you see it when it's blue? No. What can we see it with? Red. Can you see that? Midpoint red. Okay. So the midpoint of this breaker technically is right here, this red dashed line. And it's below the settlement price of yesterday. So it could come down here and accumulate, and then we can see it, continue up, which it's kind of looking like it might want to do. Still supporting price here, though. If it breaks this low and drives, then yes, I would say it's coming down here. This was a pretty solid reaction out of there. So didn't come up into this fair value gap yet. Now what I could do, but it hasn't come up into this first presented fair value gap either yet. Now, I want to stick with good trading psychology and not take any trades against bias. I could, I have, but I would prefer not to. So we're just gonna watch price, and I'm probably gonna stay on here. I like to typically, because I know it says 8:48, but I'm in Central Time, and so go by this time down here, the one that I'm hovering over. So go by this time. I usually stay around probably till like 11 or 10:50, and if I can't find a setup between that time, I'll shut it down for the um, morning session. I will, if I don't take a trade in the morning, um, I might look at it for the afternoon. Um, I'm probably not going to make another video this afternoon. So if I take a trade, you'll see it or hear about it tomorrow or whenever I post another video. Sorry. As you can see, it's gravitating up towards this fair value gap. Now, I didn't like the fact that it stopped right before the opening range or midpoint of the opening range gap. Here's equilibrium right here. I don't like the fact that this fair value gap is actually, inside equilibrium. So I'm thinking more towards it's, wanting to gravitate up higher. Um, it doesn't have to though. It can, 100% break lower. But I would like to see it gravitate back up towards here and then maybe come back down over here. Now, here's what I will say. If it comes up here, fails, and then creates a fair value gap after this one, and doesn't take out this, I'll take a short. I'll take a small little scalp, and I'll do a run below here and then get out. Because it could go lower, but I do not care about that. As you can see, it's coming right up there. Let's see. Oh, it is supporting by this breakers. So I did like that as well. So I like this signature. So if it gets above here, because this will become a breaker as well. If it gets above here, gets back above this breaker, we can possibly look at taking something. Now, actually, this is what my rule is with first presented fair value gap. If it gets above it, comes back down and touches it as the opposite of what it's originally supposed to be, because this is a bearish fair value gap. So that means inversely, if it gets above it, closes above it, and comes back down into it, it should act as support. But it's not doing that here right now. It's doing, what I kind of, thought it was going to do, and it drove right through there. So I knew I didn't like that because equilibrium was right here. It was inside equilibrium. So here, let's watch price. I'm going to take this off. Actually, no, let's keep it on. Let's just do that. So staying inside that first presented fair value gap as of right now. Also, let me see, and it dipped below midnight opening price, but stopped below midpoint of the opening range gap. Let's see here. Still respecting that first presented fair value gap. And truth be told, also, if it gets below here and comes down here and breaks this, it's more than likely, like I said, going to continue lower. Come back up in the fair value gap. It's respecting it pretty well. Okay, so technically on the 1 minute chart, market structure is bullish because we have a swing high here, it's broken, and now we're bullish. So, like I said, if it can get back down into bearish and afford me a setup, so that means it would have to break another swing low before it gets down here. And like I said, create some sort of confluence that I like to take trades off of, then I'll take a small little scalp for you. Now, another rule that I like to use is that if a higher time frame fair value gap or confluence gets tapped into, the first fair value gap outside of it, completely outside, like it has to be completely outside. Like this candle, like the 3 candlestick pattern has to be completely outside of it. Then then that's a high probability, setup for a trade. Coming back down into here, what I would like to see it do is come down here and drive back below it, and then act as, like I said, right now it's technically, already passed all the way through it. But if it gets down below it again, this can be reclaimed, and this can become, like I said, used as a bearish fair value gap again. We also have this breaker right here, high, low, higher, high. So this can be reclaimed as well. And if you notice, now for bearish breakers, I'd like to use blue, this blue, instead of this blue. Look at that. The body is staying inside that bearish breaker. So I like that. So some people, you could, if you wanted to, some people could have taken that trade right there. Could have entered right on that candle right there. Now, where would your stop be? Could it be above the breaker? If it's above the breaker, you're getting stopped out. So your stop would have to be right here. And if you targeting down here, 1.13, I mean, it's not crazy, but it's a trade. All right, so back down below here. Now, if this thing supports price, like I would like it to, then we might see a continuation up. But right now, I still think, it's going to close at least halfway of this gap. But it doesn't have to. We also have, like I said, this green line right here, which is a daily high. Daily highs are very, very powerful confluences for setups to be around. But yeah, I'm not particularly liking anything here right now. So it's inside this fair value gap right here, and it's inside this breaker right here. See that? I did like that. I liked that. As far as when it comes to bullish behavior. Where is high? Here's so in the first 30 minutes, where has it gone? Nowhere. So that's what I'm saying. Like, that's what sometimes happens when you have a lot of movement overnight. Because here's the opening price at 9:30. It came up, came down, came up, came down. Now it's gravitating right around the opening price. So that's what I'm saying. Like, I don't really like that. So that's why I'm just staying still. go back up to the 15 minute. All right, so it's back up inside this bearish fair value gap. It's driving higher. It's come back up into the first presented fair value gap. So I like that for bullishness. So let's see if it can't drive up higher, come down and touch it, and then, like I said, use it as support. So it came down here. Now it did color outside the lines just a little bit, but it used this more than likely like a inverse fair value gap. I like to use inverses gray. So I did like that. Driving up higher. So as far as when it comes to filling halfway through, like I said, because we have this large gap, it wasn't even able to come down to midpoint. So what is that going to tell me? It's going to tell me that it's pretty bullish. So let's see if it's going to support it. I like this reaction like that on the hourly. Let's see here. We do have the fair value gap completely outside of the breaker, but it's still around the first presented fair value gap, so I'd like to see it support price right now before I look at taking anything. Didn't miss anything. If I do, so what? The first rule of trading is capital preservation. Okay. Still inside that bearish fair value gap, shaded in red. Nice reaction out of there. Now, I said I didn't like the fact that couldn't come down and touch it, but like I said, this thing is showing me that it's pretty bullish, so it doesn't technically have to for me to be confident enough to take a trade from there. But I'm still not convinced that it's ready to expand yet. We also have this breaker, low, high, lower, low here. Low, high, lower, low. I will. It's inside this breaker. I see it's supported by the breaker. Actually, since we have a swing low here, figure Fibonacci here. 50% is down here. I like that it's sitting right there on top of the breaker. And we have this small little fair value gap right here. So it comes down and touches this breaker. I'll say like right here-ish. Let's see here. Let's see. So this is a balanced price range. And this breaker should support price. So what I'm gonna do, let's see, 10. Yeah, so I'll buy it. I'll buy it if it comes down below. If it comes down into this breaker. And chase it. Cannot chase it. Wait for it to come back down. Equilibrium's right here. Below equilibrium. Fair value gap. Breaker. Actually, I'll move it right there. And then we're going to, what's going on here? Why is it slow? It's just being slow, I guess. So we have, let's see here. There we go. I don't know why it's being so slow with the stop loss. I don't know why it gives me this message. That's weird. Funding ticks. What's going on? I haven't missed anything yet. As we can see, though, about 5 minutes, if this thing closes above this fair value gap, this can be changed to inverse. I'd like to see its support price. Delete that breaker for right now. Driving higher. This thing is bullish. Just gotta watch it. About to hit all-time highs again. Come on. Come on. It's not just gonna leave it like that. If it does, that gives me really good confirmation that it's going up high. Do, 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 do. Think about how many stop losses are above that high right there. Yeah, that's all-time highs. Think how many people are trying to short that, and they're just like, think about their, you know what I mean, their sphincters right now. Let me put it that way, in the nicest terms that I can, because I guarantee you, they're not feeling too great. All right, so I like that. Now, because it's moved so much away from this, I don't like that. So I'm gonna wait for it to show me another setup with a confluence that I can get long in. But I will have this breaker noted. But it's already moved too far away for this setup because it could. Because like I said, this whole thing is technically the breaker. I don't want to take a trade with the stop loss down there. It's too large for me. So it can come down in here. I still no way that it's just if it leaves there, then that's perfect for me for a setup. But like, and it even if it does break it right there, I mean, I would still be bullish and want to see continuation. But that's crazy. Which I mean, that does that. It does that. It does it on purpose because it wants to trick traders thinking that this is what? This is resistance. So what are people going to do? They're going to start selling it. Oh, it's not going above there. Sell it, sell it, sell it, sell it, sell it. And then, depending on how low it comes, they're really happy and they're like, "Oh, this thing's going down to hell. I'm going to be a cajillionaire and I'm going to quit my job and move to Dubai." But market sometimes has other plans. So I'm going to take this 4 hour breaker off because it did its purpose. As we can see here, boom, boom, boom. Wasn't particularly liking the fact that it left there. That's the reason why I didn't feel confident taking the trade. No worries there. But as we can see, the first fair value gap completely outside above the breaker does get hit. Boom. Institutional order flow entry drill, which is where price comes barely down in there. Can't even touch the first presented fair value gap as support. And sends it higher. That's a nice little trade right there. If this had come down here, hit that, and done this, I would have actually looked to take it right here and ridden that there. But this definitely was for the setup. I said I was going to take this off. Makes it a little bit cleaner, I guess. All right, it's 9:15. So go back to the 15-minute. This now should support price if it comes down into it. Doesn't have to. We also have this fair value gap, and it got through it here, but it's now come back above it. So what should this be treated as now? A reclaimed bullish fair value gap. There we go. Sayonara, bears. Uh-oh. Maybe not. Maybe not yet. That's fine with me. I'll take that. I'll if it affords me a setup, I'll take that trade. Going back up there. Keyword affords me a setup. I didn't have a setup that I liked, so I didn't take anything. No harm, no foul. No money lost. We're all good. But this is because I'm speaking out loud right now, but this is my, what I'm thinking in my head when I'm just trading by myself. I'm thinking out loud, obviously, right now. No way. See if this candle can support price as an order block. Opening price of the order block. Very sensitive area. Also, midpoint of the order block. I'm not saying this thing should support it. I'm just saying you can look at to see if it supports it. Because in my opinion, I would love it for it not to support it. There's the midpoint right there. Boom. Nice reaction. Boom. Driven higher. Oh, up to the opening price again. Now let's see it. Yep, above the opening price. Now I'd like to see it stay above there and drive through that high. Yep. Keep going. Keep going. Keep going. Keep going. Boom. Bye, bears. Bye bye. Great. Beautiful, beautiful, beautiful. Beautiful. Now, what do we see here? We see the midpoint of this order block right here with this dashed orange line, if you can see it. We also see this purple line, which is the opening price at 8:30. The 8:30 technically begins, the morning session for stock indices. 7 o'clock does, but the opening price at 8:30 is like the midnight candle at midnight. The midnight candle, excuse me, like this. So we see price come below it and drive higher. Same thing here, come below it, drive higher. Inside an order block. So that makes sense. Now, Could you take that trade? Could. That's very, very small. And I wouldn't be comfortable with all of this movement up here without any sort of retracement whatsoever. But, you would take the trade right there. You'd get in on that candle right there. 0.34? No way. I would not. That's not high probability. So we're getting to the point where I'm probably not going to take a trade just because getting a little bit too late in the session. Not over yet though. If you've stuck with the video at this point and you like what I'm saying, you like the content, you like the analysis, or if you have any questions, drop me a like, give me a subscribe, comment whatever questions that you have. Can't promise, like I said, with the way this channel is right now, I have nothing. So I mean, I'll be able to answer questions if I see them. But if I can't get around to it, or I'm going to try my best to get around to them. Let me put it that way. Anyways, so let me see. Also, I eventually, the reason why I'm doing this is because I want to work up to the point where I want to live stream these, but I can't right now because I have less than 50 subscribers. I think it takes 50 subscribers for you to unlock that feature with YouTube, which I noticed. So I'm not going to ask for a lot with YouTube. I'm not, wanting to become a streamer famous or anything like that. I just want it to be informative for people. So the only thing I ask from YouTube is give me to 50 subscribers. Just give me to 50 subscribers so I can do live streams. That way you don't have to wait for these videos. And I don't know when this is going to be up. Because, like I said, I'm recording this on September 18th, but it's going to take me, however long. I'm not going to edit it. It's not going to take me that long to edit it because obviously, there's not a lot of stuff I have to edit. But I would like to do live streams. That way, I don't have to edit anything and I don't have to post these videos, and you can get all of this immediately. So, I like that. Like it coming back down into there. Now, here's where we have some speculating to do. So we've come above this high, but this is a shallow run. As we can see, we have no bodies above this high. Very, very shallow. And we have all of these confluences down here that could potentially afford us a setup to drive it higher. This level right here, I have this level down here noted because if we take, actually it's on the 4-hour, if we take this retracement down, we know we pretty much, we already, wanted it to break this high and expand higher. So how much higher can it go? It's already broken this level, which is, as we drag our Fibonacci from the low to the high, 0.25 is right here. It's hovering around there. I'm still saying it's expanding because it's all-time highs. The next level is 0.5, which is projected up, which is half of this range. So that's what this is projected. That's the next level that I have. So if it affords me a setup to go long, that's what my initial draw on liquidity will be. Obviously, I'm going to be smart, and if I am profitable within the trade, I'll make sure to take partials. I'll probably take partials at the next all-time high right here. I might even take it at the original all-time high because there's no guarantee that it's going to get back up above here again as well. Thing is, when you're speculating, is to understand, you don't have to be 100% correct about your trade idea to be profitable. You could be partially wrong. That means, if my target is all the way up here and I take a trade down here, does that mean that I must demand that it comes all the way up here for me to, be profitable and take, and, like I said, for me to, you know, count this as a win? No. Because, I mean, if I take a trade down here and I get this much of it, half of it, or a little more than half, that's still good. 925, getting a little late. See if we can't get below there and dip down into a discount. Because I want to see it, because right now, look how it's generating this liquidity down here. I like that. So I want to see if it can take those equal level lows. And if it takes these equal level lows, comes down here and hits one of these confluences, then I will look to take a setup. But right now, we got nothing. It's already too much in a premium that I don't want to take a trade. I would like to see it get back down below the 830 opening price. Yeah, this is fun. Here's 12 p.m. That's where I have lunch delineated, and 1:30 is where the afternoon session starts for me. One, two. So if we look at what we got here, we have order block. So still using that. I have this as orange, orange for order block, bullish order block. There's also there's also a, excuse me, propulsion block. As we have an order block, we have candles that, um, we have down candles that drive into an order block, and we have price expand above it. So with this, if it's good, this should be pretty fast. It should expand higher. And if it's not, then we might likely come down here. Equilibrium, right here. Watch that. That's all these markets run on. They run on math, mathematical, logical levels. I was never always the person to be interested in stuff like that. Coding, computer, analytics, data analytics, and stuff like that was never my forte. I'll tell you, since we got, like I said, some time, I'm not taking a trade, now, unless it gets below here and comes down here. Uh, Anyways, so I mean, just a little bit of background about me. I started out in sales, and I didn't. I mean, I was good at it, but I didn't like it. That's the thing. Like, I naturally was a gifted talking person. Okay, you see that? So it came down into that propulsion block. Now this thing should expand pretty hot, pretty aggressively now. Boom, barely, and it barely got into it. Yep, this thing should expand pretty nicely now. So when I got into, like I said, I got into sales after college, and I'm not going to give you my full background, but I just knew that the world was getting harder, and what I was doing, first of all, I wasn't going to enjoy it for as my career, but I also knew that it wasn't going to afford me a comfortable. And I say comfortable. I don't like to use the term comfortable a lot because comfortability, doesn't breed progress in my opinion. But enough to where I'm not going to be stressed, yeah, about uh, finances. And I'm not talking about financial freedom. That's how everybody presents this industry as, oh, you can become a millionaire by doing this. And I'm not saying you can't. I think you can create a seven-figure income with this. Um, does it take hard work? Hell yeah, it does. Are you going to be able to learn it in the time frame that a lot of people are advertising it as? More than likely not. Uh, and the success that you might see initially with all of this, with me it was at least, but for a lot of people, um, sometimes it's just a little bit of luck, and it can cause you to get a little bit overconfident, and you want to do stuff that you're not ready to do, which I did. I put real money on the line. I put real money on the line. Now, it wasn't a crazy amount. It was a lot for me, but it wasn't a crazy amount. Uh, and I just gambled because that's basically all you're doing. If you aren't, or if you don't know, if you're not 100% confident in what you're doing, and you don't have a strategy that you stick to, a rule-based strategy that you stick to, then you're gambling at the end of the day. Um, and losing money sucks, folks. It does. Now, everybody's going to say, oh, it's just money at the end of the day. You can always get more. Yeah, but wouldn't you rather not go through that? Like, who wants to think of, oh, it's okay if I lose it because I can always get it back. But why would you think like that? Why would you think, oh, I can lose it? I mean, why wouldn't you want to do everything you could initially to protect it? Let's see here. I did like that. I did drive above there now. Let's see, 5 minute. Still would like to come. So now, since we are above there, let's see what we got. So we do have this breaker now. Let's make this blue and I'll continue with what I was saying. Okay, so what I was mentioning is Let's see, what was I talking about? Oh yeah, why wouldn't you want to protect, your assets as much as possible? And the saying goes, why would you want to be reactive when you can be proactive? I'm gonna take this order block off. If we can come down into this breaker, sweep these below these lows, and afford me a setup higher before 11 o'clock, I might take it. But I'm not going to be aiming for, something crazy. Might just aim for this original high again. See, it broke this swing low, so bias is bearish now. We also have this breaker. Technically, it's very small, so I'm not gonna, definitely not taking a short. Um, anyways, the saying goes, why wouldn't you want to be proactive rather than reactive? Prevent, or like I said, the first rule of trading is capital preservation. So, um, and sometimes you got to learn the hard way, folks. I did, and that's what the majority of the population that gets into this like has to weather. I thought I was the exception. A lot of people think they're the exception, but it's it's just not. It's not how it works. I'm sorry. If you don't go through that and you're lucky and you make money and you make good money with it, protect that. Protect that because that's a gift. And continue to learn. That's the one thing that I can still say that every trader needs to have is you always need to continue learning. Because I've been trading for a little over a year and a half now, and I'm still learning something new. Not every day, but something new that I can use for analysis or use for my strategy edge or whatever. Um, Now, I'm not saying you have to learn everything. You don't. You can be a very basic model trader. You can, just use one single confluence and, it's one setup and you're just looking for that. And as long as you are a, as long as your, trading psychology is on point and you have good money management skills and you're not risking over leveraging, you can be wildly profitable. Wildly profitable. But some people are um, wired different. Some people like me, they want to they want to figure out the most that they can about it to where they can understand it. Now, did I use and apply every single new thing that I learned after I had a successful and profitable strategy model, whatever you want to call it? No, because if it ain't broke, don't fix it, first of all. But if you don't understand it 100% fully, then why would you expect that, you could go out there and start making money with it immediately? So, um, I'll digress a little bit, get off my soapbox, because we might have a little bit of something. I'm not sure. Like I said, it's getting a little late. Like I said, I still have taken trades before. They're smaller scalps, but we'll see. We'll see what this thing affords. hmm Excuse me one minute. Okay, back folks. So let me see. Turn that off for right now. So it's coming down into this breaker, but it hasn't gotten below these lows yet. Which I mean, I would like to see it, and I would like to see it get below here, but it doesn't have to. We're coming up on a macro time. If you are a ICT student or you know of ICT concepts, you understand macros. Macros are a list of instructions that, and I know I might get a little bit of backlash from this, but they um, they cause the algorithm that drives price to spool during a 20-minute time interval. And that time interval is 10 minutes before an hour and 10 minutes after an hour. So that means whatever hour it is in this instance, it'll be 10:50 to 11:10. And it happens every hour. And what I mean by spooling is that it is giving instructions to the algorithm to throw in whatever side orders that it wants to. So buy or sell orders. And it's going to aggressively move price to a certain level. This is the best time to take. I don't want to say the best time to take trades, but it's one of the strongest times if you have a setup to be able to, capture a pretty good run. Like look at, the 950 run from 950 right here. Boom. Drop down, comes and hits it within the macro, and look at the reaction out there. That is beautiful. Let me see here. Okay. So I like this. I like the fact that it's staying outside of it. So if it can get back to bullish and it has a fair value gap that's completely outside of it, we will take a trade. We'll take a small little scalp. Let me make sure that this thing is going to be um, within the risk parameters. No setup yet. I did like the reaction though. And this level right here, that's previous all-time high as well. What did I say about daily highs or all-time highs or whatever? Um, Setups tend to be around this area. Look what happened here. Boom. Right at that um, old daily high. Nothing, nothing, nothing yet. So with this retracement, let's project this up. Here are the levels that we have. I like this still. If I get a setup, I will be using these levels as targets for take profit areas. Coming back inside this breaker. Pretty nice. Want to get below it? Sweep that. Yep. There we go. Now let's see it take out this low. Yep. Now let's see it take out this low. Let's hit the midpoint of this breaker real quick. Right here. You can see it dash line. I know it's this. I like to have the colors the same, and I know it's not the easiest to see, but you can see it still, right? Right. Let me make it thicker. How about that? A little bit thicker. There we go. That's better. Okay, so we have this breaker right here. Low, high, lower, low. Let's see here. We're inside the 15-minute bullish breaker. And supporting price pretty well. I like that. I like that reaction. Yep. Notice time. 10:46. That is a great reaction out of there, dipping below the 8:30 opening price. So I like that a lot. Okay. So now we might have something here. Immediate rebalance. It's a very good reaction out of there. Uh, Thought it was going to be an immediate rebalance. Now, it's traded above this swing high, so bias is now flipped to bullish again. Let's see if we can't get a setup to have a run up above here and, somewhere up there. Still inside, tapping in the breaker again. We have this volume imbalance right here. I don't particularly like taking trades off of volume imbalances as they are pretty flexible when it comes to them being used as a confluence. But nevertheless, it is still a confluence or a PD array to be able to use to take a trade. Okay. 9:49. Macros about to start. I want to see about this here real quick. I know it's a stop, but I'm just measuring this for completeness sake. 320, so let's do 15, 480, yep, good. All right, 15. Change this to 15. No setup yet, though. Everybody stay calm. 950. There we go. Volume imbalance. Lower. Still working inside there. Passing through it. Still passing through it. Okay. Like I said, this is where I'm saying like the volume imbalances are flexible because as you can see, that thing went all the way through it and multiple times. And now it's, look, it's below it and now it's using it as resistance. I'm not a support and resistance trader, but um, there's a lot of flexibility, like I said, when it comes to volume imbalances. That's good right there. Okay. Do up this fair value gap right here. It has closed above, it did close above it, but now see this, that's an immediate rebalance. I don't like that because now it seems like this might come down lower here. And if it comes back up and touches this volume imbalance and sends it lower, then we're driving deeper into this breaker. Yep. Midpoint of the breaker. Still good. We're still bullish. That's the thing. We're still bullish, baby. Even if it retraces, that's okay. The thing is like I said, if you don't have a setup, you don't get hurt and you don't take a trade. And I don't have a setup yet. So I'm not worried. Did it sound like I'm, upset that I missed this? No, because I know that there's always going to be another setup right around the corner for me. Let me see here. I don't like that. I don't like the fact that it left equal level right there. But it did stay above the midpoint of the breaker, so I will allow it. And if it gets outside of it and gets above it, and we have this breaker right here. Here's the volume imbalance. Come up, touches it, see if it sends it lower. Because I'm thinking this thing's coming down a little bit farther now. I think it's going to be coming down to like right here. Look how sloppy it is on the downside. Like, do you really? And this is a setup in itself right here. You can go to ICT's page, and if you look up Venom, then you will see this exact um, pattern, strategy, or model, excuse me. I like that. I like the fact that it did sweep below those equal level lows, but it stayed above the midpoint of the breaker. Up. Let's see. Let's see. Come on. Keep it. Keep it. Let's see it. There we go. I like the fact that it's staying above the midpoint of the breaker. I do like that. But it's going to have to really get back above. It's going to have to get back above this swing high and, show me a willingness, a nice displacement to the upside. But like I said, it's late in the session. I tend to have something on before 11:30, and 11 o'clock is really my cutoff for the morning session. After that, I'll come back for the afternoon and check out something. Like I said, if I decide to come back for the afternoon, I'm sorry, folks, but I'm not going to be making a video. I like that. Like that a lot. Like that a lot. Come on. Okay. That's nice. Still working inside that volume imbalance. Hmm. Having a hard time getting above it, right? Should tell you something. It's a signature. Should tell you something about price. Yeah. Yep. I think this thing's going to retrace lower. Still staying above the midpoint, though. Or still hovering around that midpoint, so notice that. Notice that. Ah. Now it's getting below it. Yep. I believe we are done for the morning session. I'll sit till 11:10 with y'all, though. Give my analysis on it. So, sorry. With all this, we had this breaker right here. Boom. We had a market structure shift right here. We have the Venom model right here. A little fair value gap. Because, like I said, or like I mentioned about this, this is a balanced price range. I like the fact if it can come down here into this breaker. So if I was to take an afternoon trade, that's where I would be looking at seeing it come down to. And study the rest of the day, or if I'm going to post this later on tonight, so you'll see it. Study to see if it comes down in here and it causes price to resume higher. But like I said, this is a balanced price range. It shouldn't come back down below here. If it comes back down below here, it's coming lower, or technically there. It shouldn't come back down below there. Because if it does, it's coming lower, it's coming there, and it's coming down there. Oh, I was going to mention, so that's a balanced price range. This is a balanced price range. When price was right here, like, let me take replay. When price was right there, right there. Price was right there. That's a balanced price range. There's no reason for it to come up here, 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 here. So what do we have? We have this. What do? Wait for it to poke its head right through there, and you can take the trade. Like I said, I don't want to take a trade that's opposite of the overall bias, my overall bias. Um, but you can. You can. It's still inside that breaker, but it's going to have to get way above here. Now, notice how it got below the midpoint. And we're at 10 o'clock. 15 minutes. It closed below the midpoint on a bearish candle. Unless it shows a very good willingness to want to stay up. And we also have this 15-minute fair value gap, which you can. And like I said, if it does, then I can see about taking a trade. This green. Okay. That's pretty good because it's still within the breaker. And it's showing very nice displacement. Volume imbalance. Bias is bullish. All right, let's see if we can get a setup. Here's the 8:30 opening price again. All right, I like this. We come down and can get below that opening price. I'll take it. I'll take that trade. Make sure. Risk is there. Let's do 11. Not 111. 11. Yeah. Here we go. I thought it was. I'm gonna do this also. Why is this on my paper trading account? That was weird. Right there. Stop is going to be right there. Why is it doing that? Oh, that's why. We'll target this high. Target this high first also though. There we're in. Boom, like that. Came down quick, didn't it? I like that reaction out of there. All right. As soon as we get a bit above this high, I'm taking 6 off because that is a quick trade. Taking half off here. Boom. Rolling my stop to break even. Look how fast that was, folks. That was so fast, right? And we're going to do, what are we at? We're at 5 contracts, right? Yeah. I'm going to stop to break even. Takes me out, it takes me out. But that's a small little scalp. That's enough for me. I'm going to take 3 off when it comes up here again. Get above it. Get above it. Give me it. Give me it. Give me it. Boom. Thank you very much. Thank you very much. Now we do have these equal level highs right here. I'm perfectly satisfied with my profit, but if it can get above here, I will take 1 off here on a limit. A little bit below it because we never demand perfection. We always strive for perfection, but we never demand perfection. Oh, I need to adjust my stop. I hate having to do this manually, but the orders are terrible with the stop losses, and it was glitching so bad. So I did not want to do that. Now I would like to see this candle support price. As we can see, we have profit. Now if it can't support that price, this candle, I'll take 1 off. I want to see it drive higher now. Getting at the end of the macro time. There we go, like that. Yep. I like that a lot. Get up in there. Get up in there. Get up in there. Should drive up there soon as this thing turns 10 to 11. 10. Yep. There it is. A little more. A little more. Give me a little bit. Give me a little bit. Okay, order block again, right there. Should support price. Give me it. Give it to me. Give it to me. I should probably turn these on, actually. I don't really like them, but I will show you for completeness sake. Come on, pop up there. Pop up there. Pop up there, baby girl. Pop up there for daddy. Thank you. All right, we got one contract left on. I have taken everything pretty much off of my trade. Let me adjust the stop to 1. And that's, let me see. I really don't see it coming up a lot farther before lunch. I might see it come up above this high and, you know, we're just going to leave it on. Sell one up here. You know what? No. I'm not going to be greedy, right? Since we didn't capture it from down here, we're not going to aim for it up here. And I would, sort of speculate in the afternoon, but I've taken a trade. I'm profitable. I don't really care. Bagged. $309. Account summary. Total P&L still going. Open P&L is $58 left. Stop is a break even. Why is my stop still at 2? I need to change that to 1. Confirm. Make sure that's okay. So stop, break even, a little bit above break even. We're gonna close it out above this high. But that's a small little scalp. Like that's nothing crazy. Uh, that's what I would do if I was just trying to take small little chunks out of the market. That's all you got to do. As you can see, like when this thing snapped down there, like here's where I bought it right there. Like when that thing snapped down there, and I'll put that on. Let's stop right. Come on. Okay, I'm gonna take this magnet off. Right there. I'm gonna be doing that. But that's sometimes scares a lot of people. Um, but if you understand that this whole thing, this whole mechanism is a computer, it has limits. So that means no, I don't like that. It might get stopped out here. Well, it could if it doesn't support by this breaker. Actually, what I'm going to do is I'm going to roll my stop below this volume imbalance because it's worked it so many times. So if it comes back down into the volume imbalance, I'm wrong, and that's fine because I've bagged pretty much 95% of what I had on. Anyways, if you understand, this thing is a computer and it has limits, then it's not going to go past a certain point. So as long as you have a proper, stop loss placement and your bias and narrative is correct, you're going to be on side. Like that's the thing. Like people are, a little bit scary. Like they're like, oh, but what if it comes back and so what? It's a losing trade. Now, are you going to let it define you as a trader? If you have the skill set, like I said, and I like this right here, stand right on that daily high or that all-time high. Isn't this just like this is like poetry? Is it not? Is it not like poetry that it's amazing how precise, that's the word, precise these markets are. Um and I really don't want to stay on here that much longer. I've been on here for what? Almost 2 hours now? I got other things to do. We'll see. Um I might leave the recording going, and I might show the recording uh, if it comes up and tags the limit order. If not, then oh well. uh, but I'm done with the commentary. You understand, or I hope I not understand. But I hope this was insightful. I hope this was helpful. I hope you got something out of this. Here's the executions. Here's the limits and stuff like that. Limit out. Like I said, I'm not doing anything crazy, folks. I am just wanting to, like I said, be a profitable trader. Um, the first trade on here was profitable. Does that mean the second trade automatically has to be profitable? No. And if I lose more than I made on the next trade, so what? Um, it's all about, the overall um, equity that you have, not one single day, one single trade, one single session. So with that, I am going to leave the recording going, and I'll upload this video later. But this was fun. This was the first of I don't know how many I'm going to do of these. Like I said, eventually, hopefully, I can work my way up in the subscribers to where I can do live streams. That way, I can offer this to y'all right now live. Like I said again, though, one more time, disclaimer: not a licensed financial advisor, not licensed to give financial advice. And what I'm actually going to do now is adjust this right down here. I'm gonna put it above the bodies. Actually, yeah, we're gonna put it above the bodies because that's where the bulk of the trading is, and that's probably a difference of $5 or whatever. So we're good. Um, Full take profit will be probably around, yeah. So, alrighty, folks. Oh yeah, like I said, not a licensed trading advisor, not a licensed financial advisor. Do not take anything that I say as financial advice. Be safe out there, and we will. I stay on. I will stay on. Screw it. Just because, like I said, if it hits it within the next 5 minutes, how about that? I'll stay on for 5 more minutes to jump up there and take it, which it looks like it might. Yep. Yep. As soon as I say something, as soon as I say I'm going to leave, it starts to go. Give me a little more. Boom, baby. Now we're going to cancel this still stop. And there's the business, folks. $405 total. Total profit today, 405. Account balance, $1,405. Orders. This was, yeah, these were from earlier. Here's the buy. Here's where it filled. I don't know what that is, but here's the filling. Notifications, what is that? Cell 1, cell 1, cell 1, cell 2. Okay, cool. Alrighty. That's going to be it today, folks. Fully believe it's going to come up here, or at least gravitate up towards here. Don't care if, like I said, I'm not concerned about capturing the rest of it. I've gotten exactly what I came for. And I'm going to clean this up here because I'm not going to be taking a trade in the afternoon. Alrighty, folks. We will catch you next time, probably tomorrow. Should be able to upload this video by tonight. If not, then I apologize and I'll get it up as soon as I can. But appreciate your continued interest, and like I said, this is the first of many. So let's make it a good series. Let's make this a good journey. Alrighty, folks.